Hey, it's Mac with PriceActionTradingSystem.com, and it's Friday. It's February the 1st, first of the month. We just wrapped up our January trading, and we get one day of the new month on a Friday. And hopefully you had a good a good January trading record, and if not, we'll have a better one this month. But let's talk about the chart here. Let me show you a couple of things quickly before we talk about the trades. It's a relatively simple um, trading, a trading channel here, and you got your lows here and your highs. And let me show you how I found my what I assumed was going to be the trend channel. You already had this in place by 6 o'clock or so, really by 4 or 5 o'clock, because these lows were made down here around 5 or 6. So you draw your line off those tops just like I did, and I started with it there, but it became evident that it was going to be down here, and you can see that I just copied that line. I found this line off the high, and I do this quite often when you're having a difficult time finding it off the lows. That's how I generally find it. I didn't look at this, but I'm guessing if you came down here, it's going to look the same, and you can see that it does. So really this trend almost started into yesterday afternoon. So, but play with those lines, because a lot of times when you're having a hard time figuring out where the lower line is, see if you can't find some starting point off the highs. And this is real clear here. So I had this, so you should, if you were in here earlier enough, you should have had this before we ever broke up here. Now, when we broke up here, you got to be questioning what's going on. But this stuff is all news driven. A lot of news came out this morning, and the news will do that. It will cause volatility and people to overthink and overreact. And remember, this one thing important to remember, I talked about it yesterday. I'm pretty sure I know I've talked about it this week. But whenever there's a news item, it's very rare that you're going to get a news item that we don't take back the news, the move rather quickly, even if it doesn't do anything but come back and just reset and then take off from there, kind of like it did here. This is when we had some big news this morning on the farm payroll or something of that nature. I forget which one this was. But prices rocketed up, overshot the top of the channel, and then had a nice two-legged correction. And generally when you get a two-legged correction, that's the middle point of a bigger move. And so I would start here, and I would be looking for that at a minimum of a target. And guess what? I believe that's where we're probably, you see, we're real close now, and that's probably where we're headed. We're just within a point or so away of that. And if you bring that even back down here, you'll see that's really almost the same as that move right there. That whole move right there. But what I think we got there is, look, this is actually, the way I was looking at this originally was this was leg one. So I was trying to figure out where prices were going to go from here. If you drag that up, look at there, perfect measured move. And you'll see that over and over and over. The market moves in twos. We've established that. And be aware of that. If you don't know that rule, it's a good one to know, because it's very important. But let's start down here. Really, there wasn't a good setup until a little bit after 7. When we came back here, I drew this one in green because there's no real setup here unless you bought this blindly. It's hard to find, there's no setup. You don't want to be entering this bar right here. Look what happened. It broke higher and came right back and would have, taken out your stop if you tighten your stop. Obviously, if you had your stop down here. So you had to find a way to get in here, either buying blindly or one thing I can tell you, when you've got a trend that's working up and suddenly you see a huge bearish bar, man, and people go short right there. That traps so many people. It's amazing how many people will get trapped by that. And instead of going short, what I'll do is drop a limit order right there, and that will tick one tick lower. And most of the time, it's a bar that big, it's going to snap back into that bar at least 4 ticks, because that bar is probably 8 or 10 ticks long there. So 4 ticks is nothing. And so, by dropping a limit order there, I'm already out here, and any runner can run all the way to here, and your runners are easily safe. So, but again, it's a real aggressive trade, and so I marked it in green because the average trader is not going to be able to trade that. I know that. You don't have the experience. You haven't watched it enough, and it takes massive intestinal fortitude to buy below a bar like that. So I understand it, and so I know that most of you probably were not able to enter this trade anyway, here. But if you did figure it out, or you did find a way to get in it down here near these lows, that was a great trade. Especially if you found this line and you drew it down to this one, because it bounced right off of it too. You had a double support here. You had the strong. Notice all these touching, these bars touching here, and the closes. That's what I usually use, the last closes. That's what even if you'd have drawn it down here, then you see the line. But I like the closes become very important to me, and you get the most touches with closes right there. And so you got double support here at your back. You got the flat support resistance, and then you got the trend line that I found from over here, and then it took off. This trade, I was tempted to mark this one in green too, because you're getting long so close to the highs here, but there's enough room to scalp out before getting to this high, and you see it did pull back right there. It didn't come back and take out the breakout. It missed it by a tick, and so if you got in there, you could have ridden this all the way up. And again, you should have been thinking, hey, there's my first leg on this move. Where's my next one going to? And look at that. And the last close is really right in there. We actually went a little bit further than that, just by a tick or two. But that's, measured move is not always exactly to the tick. It's scary how many times it will be exactly to the tick, but it's not always. It's just a general area to give you a target, and generally you're going to sometimes you'll come up a little short, and sometimes you'll overshoot a little bit. So I usually try to exit a tick or so in front of the measured move, just to be certain that I get out. And, if you get it all, that's great, but you don't want to, the last thing you want to do is have your exit order right here, and then it get within one tick like right here, and then sell off, because guess what? You just, fighting over a tick or two, you gave back a bunch of money, because this sold off pretty fast here. And this would be the next trade, the third trade, and I marked this one in green again because it's a counter trend trade. It's very aggressive, but this stuff was news driven, and remember what happens. Usually the news is taken back, and it took as much as it could without getting outside of our trend line. And so this trend line, this strong support and resistance here, or strong support, I guess I should just say. There's no resistance here. The resistance is up on this side. This strong support was holding, and we couldn't break it all day, all the way up, and we're still fighting it. And we're about right to where my measured move was that I showed you a minute ago. We'll see if we go higher. We could go much higher because the channel is way up here, even though we do have I will show you this too. You've got a temporary channel right here, and I guarantee it'll match this line, and you see that. So you got to pay attention to that channel. We may pull up to here and then overshoot, and that's kind of the center point of both lines, and that's what you call a median line. I don't want to get into all that because it's, it has some meaning and it has some value, but my opinion is you can't trade off of it. You're better off to use the rules that we go by, so I'm not going to get into all that. But so anyway, you had a chance to short right here. It's very aggressive, but when you got these three overlapping bars this far away from the EMA after a two-legged measured move, I like to drop a limit order right there and get short and watch it go. And, if not, you could have gone short here. It's a doji, but it's a failed break above these three, and we're already way overdone. And this was an easy scalp, easy trade, and you actually could have ridden that trade all the way down to where we, one tick in front of the trend line, and you would have got out right there probably, and so you could have ridden this from here all the way down to here, and that's just above 15 up to about, it's 4 points there at least. You could have got out of that trade just by trading it conservatively. And then of course you can't ignore the long here. the reversal bar right at the trend line. It came back really quickly, but as long as if you kept your stop just even one tick below the signal bar, which is this bar right here, your stop didn't really get challenged, and then it bounces. And notice these matching lows here. It kind of overshot that area. You got a little double bottom kind of across there, and we overshot that and then bounced, and it came back and tested that line, and that's not uncommon. And so I really meant to have this spread here. So if you didn't enter here, you definitely had to enter here, or either try to get in again on a limit order here. And this is a bearish bar, so that was the reason I didn't mark this one in blue. I was going to maybe mark this one green, but the odds are we're going to go back and do a retest, but you don't know that we're not going to break lower. So going long above that bar. But notice we got the low here, and then we got a double retest. Anytime the market tries something twice and fails, it's probably going the other direction. And then suddenly the news came out, and this thing shot up, and then it was off to the races. This one right here, even though this is all these overlapping bars, this was news related, and this is really kind of a two-legged pullback. We came up to this high, we pulled back. We came back up again, then we pulled back. So that's a two-legged pullback to the EMA. And yeah, you got to be really good with to see that, but it's there. And this is we're getting a lot of strong trend stuff out of the news. And you got to figure we're going to test the high. You got to figure we're at least going to test the trend channel again. And then boom, it takes off. It's scary taking this trade, and it is a little more aggressive. But on a trend day, when the market's been trending up the entire time, sometimes it's the only way you're going to get in the trade. You got to take it. There's no other way to get in. And you see you had no way to get in unless you waited till here. And you get the same entry right here. I think it's the exact same entry, as a matter of fact. No, you would have got one tick better by being aggressive than waiting on it to come back here. There was also a chance to go short right here. Again, I drew it in green. It's an aggressive trade. It's not the ones that people that are borderline profitable or unprofitable completely should be taking because it's counter trend. But we overshot the channel again. And, once that happens, you're generally going to get a sell-off. A lot of times you'll get a reversal, but today the trend is just too strong for that. And so you get a two-legged pullback. And the first thing I tell people, when you can spot that and notice that not only you got one leg, then you got a two-legged correction, then another pullback. So it's a two-legged correction with a two-legged correction in the middle. And that generally is the center point of a bigger move that's going to look like that right there. And then, of course, when you drag it over and you see where we're at, we're just about there. We're within a tick of making that measured move. I'm thinking we may overshoot that a little bit, but just because even if we make this little tighter channel, it's got to get on up here, but we may come on up and hit this channel here. You may get suddenly a burst. It hits stops and runs straight up. Or it could hit the area and sell off and break the trend line and go down from there. You never know what's going to happen. But this would have been my target, and you see that's exactly where it went. No runners on this trade. It did come right back and get the runners, but you got a chance to enter again right here on a second entry. Here's your first entry, counting off the low. Then there's your second entry. And guess what? Your runners were safe off of this one. And you know that you could have been ridden it all the way to here. And there you go. We got a measured move now. And you could have exited right there and made, let's just see what you'd have made off this trade if you'd have done that. Oops, wrong place. Your entry would have been 1504.75, and to exit one tick in front of that would be 1510, so about 5 points. Basically, you'd have made 5 points right there on a single contract, and it never really took any heat at all. I mean, it took off from the start and was gone. And that's why I like second entries. Those trades are the ones that do that kind of stuff. But notice here, you got another chance to enter. There was resistance here across this. That's why I got this line across here. But notice this. There's your high. You get a pullback, a leg up, another pullback. So there's a double bottom right across here. We tested this breakout area twice. The market fell to go lower twice, and guess what happens? It goes up again, and it's gotten real choppy. This is why look at the morning at the good moves, and then look what's happened since about 10 o'clock. Just that. We had that move in a few minutes this morning. Of course, some of it was news driven, but the movement is just so much better in the morning. That's why I always tell people, try to trade in the morning if you can, because the afternoons are much more difficult, and there's much less movement in most cases. I mean, there's always exceptions to every rule. I mean, I've seen it look like this all morning, all the way across your screen, and suddenly something happened, and then it take off straight up or straight down in the afternoon. I've seen it wait till right at 2:45 or 3 o'clock and take off and move 5 or 10 or 15 points. So anything can happen. But what we're always looking for the biases, and the bias is that the trading is better in the morning. And, I'm not trying to encourage you not to trade in the afternoon, but I'm just telling you from experience, you're better off to try to make your money in the mornings and not so much in the afternoons. But again, this is a two-legged correction, and that really led us into the noon time. And there was another entry right here. It's not a very good one because look how flat that is, but it's a bounce off the trend line. It's a double bottom. It's trying to go lower. So if you took it, guess what? It would have worked. You would have had to ride this out, but you can't ignore this trend line right here. And every time you get a reversal bar off of it, you just about need to take that trade. You just about have to take that trade. Eventually it will fail. No doubt about it. Eventually you might get a bounce off there that might fail. But that's why you take every single one of them, because look what would have happened. You would have made 1, 2, 3, 4, 5, 6 winning trades, and even if 7 actually, because that one worked. So by that time you don't need to take the next one. But the next, we don't know that the next one will fail, but it could. And if you got 7 winners and then all of a sudden you got 1 loser and you lose a point or 2, no big deal. You just gave a little bit of your winnings back. But that's why we don't pick and choose. If you start trying to pick and choose, and normally what will happen, I've been there. I know what happens. Traders start out and they watch this bounce, they watch this bounce, they watch this bounce, they watch this one, and they think it can't go any higher. And then they watch it do it again, and they watch it do it again. They say, "Dadgum, I've watched every bounce. I could have made X amount of dollars already. I could have already had this many winning trades." And then the next one they take is like this one. And instead of just kind of being slow about going on, that's when you get the break of the trend line, and it loses on them. But that's how the market works. You can't second guess it. You have to go with the bias, take the trades, and play the odds, because in the end you'll be a winner by playing the odds. So anyway, that's pretty much it for today. I hope you had a good trading week, a good month, and if not, we'll work on February, and hopefully we'll have a better February. But this stuff is not rocket science. It's not easy. No, it's not. But it just takes a lot of experience and time and dedication. But if you know where to look, the key entry area, the key entry points that you hear me talk about all the time are always along these lines. These flat lines and these angled lines are the same thing. They're support and resistance, and all this is an angled support and resistance line. This is an angled support line. This is an angled resistance line. Now, when they're angled, we're more interested in the trend line than the channel line, for the reason that you get, just like here, you get a lot of overshoots, and the market's strong today, and but the trend line, when it's angled, is the more important one, and the other side is very aggressive on a trending day. But when it's flat like this, you don't care whether it's high or low, unless there's a slight upward bias to the move as well, which there is here. Notice that every time this comes back here, and it makes a similar low, at the same time it makes a higher high, and that's telling. That's a tell. And that's telling you that the buying is stronger than the selling. So anyway, I'm going to wrap it up. It's Friday. I want to get out of here. We'll do this again next week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.